and Parag Thakur joining us for closing chat. Kunal Bothra is also back with us. Good afternoon, everyone. Amisha, first question to you. Would you believe today's pullback? Would you say that there's more to come, and is the worst over, or would you say that this is just a dead cat bounce and we are in a bit of a near-term bear phase?
No, I don't think I would say the worst is over. The volatility will continue. There has been a short covering today, very evidently, and whether it will continue for a day more or so, very difficult to say. But I would think that the markets will take little time, to see through this kind of uncertainties which are around it, and, latch on to the bigger themes that everyone is talking about, how India is a beneficiary, and how in the medium to long term we can build ourselves better, and so on and so forth. I think to see through with clear vision, markets will take a little more time.
All right, so the worst may not be over. That's the word coming in from Prabhudas Lilladher. But what about you in the banking space? Are there any buys that you would recommend now? Because, some of these stocks like ICICI Bank are down more than 30% this year.
Absolutely. I think ICICI Bank is definitely looking good at close to, 1.4, 1.5 kind of price to book. We all know there are certain large pockets of debt-ridden balance sheets, as also some new sectors like steel, metals coming into trouble. But still we think that is these valuations and the kind of underlying improvement in business that they have been doing, plus some of the pockets of some of parts businesses that they have, like insurance and so on, makes it very attractive. I would rather think that even at these levels, from investments perspective. So the first question was in terms of market view and volatility, which I think will continue. But from investments perspective, I think at 220, 225 level, even SBI has come close to one-time FY17 book, which makes it very attractive. So both of them look very good to me.
All right, stay on with us. We'll just your call on metals, because that's one space which is now dividing the analyst community. Valuation-wise, some of the cheaper stocks, but we don't know the global environment or the uncertainty where it's going to end. So for names like Tata Steel, Hindalco, at current levels, do you think the risk reward favors the investor, or would you stay out of these stocks?
I think they would at best be a trader's delight. There would be, times when global prices, since they have fallen so much, commodity prices, either with dollar movement or either with some bounce, if there is a small bounce back in the metal prices, then the stocks can correct and show some trading upsides. But on a very medium-term basis, if you see over next 2 years or so, I don't think they will be supported by any kind of earnings growth, except select stocks like, for example, JSW Steel. But in case of, say, Hindalco, which you were mentioning, they have, apart from metal prices, domestic challenges like their coal mines having gone and so on and so forth. So I think that except for trading bouts, it is going to take time for making any consistent returns from these stocks.
Okay, fair, giving us their views after a long period of sell-off in the market.